Hello guys and welcome to the channel. I'm so pumped today. Just as I promised on my recent videos, I think we started this channel just about 55 days ago, not even up to just about 55 days ago, and we are already above 5,000 subscribers. That's totally crazy. That's crazy because even if you just check on YouTube, the average time people take to hit 1,000 subscribers, they're gonna tell you it's gonna take you at least 22 months. About 22 months. That's about 2 years for you to get your first 1,000 subscribers on YouTube. But we started this channel. It's not even up to 3 months now. I think about 55 days ago, and we are already above 5,000 subscribers. And as I did promise you guys, and I'm gonna stick to my word. I did promise you guys that as soon as we hit 5,000 subscribers, I'm gonna be bringing you guys the full course on Forex trading for free. That's why I have this topic today. What is Forex trading? A step-by-step full course. As I did promise you guys, at least we've already hit 5,000. We hit 5,000 I think 2 days ago, and we're counting. And as a thank you for subscribing to my channel, for watching my videos, for liking my videos, I'm going to be able to bring this full course to you guys today totally for free. So it's going to take us a couple of videos, maybe 20 to 30 videos or whatever it's going to take. But just stay with me, make sure you subscribe to the channel, and I'm going to take you guys step by step. This is going to be the first video of the whole series. This series, we're going to be able to have FX101, that's the Forex for beginner. We're going to have FX201, that's Forex intermediary, and we're going to have FX301, that's Forex for advanced traders. All right, so we're starting, whether this is your first time hearing about Forex, or even if you've been trading Forex for 10 years or for 20 years, it doesn't matter. This video is for everyone. Or this series of videos that are going to follow, they are for everyone. All right, so without taking much time, let's get into the video. Hello everyone and welcome to my channel. My name is Ndemazeah Godlove. On this channel we talk everything about trading, business, personal finance, and tips to help you stay profitable as a Forex trader. So if this is your first time coming to my channel, please hit the subscribe button to subscribe to the channel so that you can stay informed when I come up with content like this. And also make sure you subscribe to the channel so that you can be able to follow me along this particular series. I promise you, before the end of this particular series, you're going to be a profitable Forex trader. Before the end of this particular series, I don't know how long it's going to take, but before the end of this particular series, you're going to be making money in Forex trading. So many people ask me, why do you teach this information for free? Because I remember when I just started, I paid thousands and thousands of dollars to learn this same information. So they ask me, why do you teach this for free? Why not make a course? Why no? The reason why I teach this for free, one reason is to impact others. You can't put, there are some things you can't put a price tag on it. You can't pay, it's actually priceless when somebody comes up to me and they say, okay, because of your YouTube channel, because of your videos, because of your free tutorials, or because of your information and your advice, I was able to quit my 9-to-5 job. I was able to start a new business. I was able to be financially free. That is totally priceless. There's no price you can put on something like that, all right? And the second reason why I teach this for free is for retention. It's for retention. Just like they said, if you learn about a particular topic and you try to teach another person, the moment you're trying to teach another person, it becomes retentive. You retain it more. Even when we're still in high school, when we learn a particular topic, or in the university, when we learn about a particular topic, they will ask us to teach another person. Because the more you try to teach another person, it becomes retentive. That's why I pass this information to you guys, on my channel, so that it's a win-win situation. The more you're gaining something on it, the more I'm going to be able to stay on the edge. Because remember, in Forex trading, things change every day. The strategy that might work today might not work tomorrow. The information that is relevant today might not be relevant tomorrow. So as a Forex trader, you need to be able to stay updated. You need to be able to stay on the edge, all right? So without taking much of your time and all this, let's get into the first thing we have on our slide. So on our slide, we have what is Forex trading. And on this course, we're going to be taking you on a step-by-step full course. We're going to have a different series of videos that are good. So this is more like an introduction to the whole concept of Forex, all right? So what are we going to be learning today? So on today's video, we're going to be learning So on today's video, we're going to be learning what is Forex. All right. So we're going to be learning what is Forex. We're going to be learning what is Forex trading, because remember, Forex trading is different from Forex is a big concept, while Forex trading is an art. We're going to be learning what is Forex trading. We're going to be learning what is the size of the Forex market, what is traded in the Forex market, where is Forex traded, currency structure. You need to know what the whole currency structure, major currencies, currency nicknames, and stuff like that. So those are the things we're going to be learning on the video today. All right, so at the end of the video, you should be able to have an idea about most of these things. Okay, so you see people, they ask you every day, what is Forex trading? So to just begin with, you see, Forex trading is a global financial market. It's a global financial market where currencies are traded. That's just the meaning of Forex trading. It's a global financial market where currencies are traded. Because if you see here, we have different currency. We have the pound, we have the euro, we have the dollar, we have the yen. All of these constitute what we call Forex, because it is a global financial market where all of these currencies are traded. So if we go to the next slide, let's just see another definition about Forex. Because if we come here, remember, we have Forex, and we need to ask ourselves how the term Forex comes about, right? So Forex is spelled F-O-R-E-X. And if we check here, let me just make sure, if we check here, you see Forex stands for foreign exchange. So before this spelling comes out, you see they took, you can either say it stands for foreign exchange, or it stands for FX. So you can call the foreign exchange market, the Forex market, or the FX market. So even coming here, you see before they came out with this word, you see they took foreign. F-R comes from the word foreign. Then EX comes from the word exchange. That's why it is called the foreign exchange. So it comes out to produce the word which is called the Forex market. So when you people talk about Forex, they talk about the FX market, they talk about the foreign exchange market, they all talking about the same thing. All right. So let's go to the next slide. So here, let's see the strength. Let's see the strength of the Forex market. This is the reason why the Forex market is the biggest market in the whole world. Because if we have to check somewhere here, this graph is showing us the daily transaction, because you can see here we have the average daily trading volume, the average daily trading volume. And if you check here, you will see the London exchange is having about 7.2 billion trades per day. The Tokyo exchange is having about 18.9. The New York Stock Exchange is having about 22.4 billion transactions per day. But look at Forex. Look, Forex is having 6.6 trillion. All right, Forex is having 6.6 trillion transactions per day. All the competitors are in terms of billion, but Forex alone is in terms of trillion. 6.6 trillion transactions per day. That's almost about 80 times the next competitor on the list. About 80 times the New York Stock Exchange. About 80 times. All right. So you see how massive the Forex market is. And because of this massiveness, because of how massive the Forex market is, it is the most liquid market in the world. And that liquidity is what enables us to be able to make a lot of money in Forex, because with the liquidity, it means there are buyers and sellers ready to transact at any particular point in time. All right. So let me just bring you guys an example. When you hear, okay, I've been talking about Forex, I've been explaining to you. Let me just bring to you an example of a Forex transaction. All right. So now, you know, we have the Tokyo Olympics, right? We have the Tokyo Olympics. So let's just assume you live in the United States and you want to go to Tokyo for the Tokyo Olympics, right? So you normally, if you are going for the Olympics, you need to be able to change whatsoever currency you have to the Japanese yen. Because in Tokyo is the capital of Japan. And in Japan, they use the Japanese yen. So no matter where you are, you need to be able to change your money to the Japanese yen. I'm giving you an example of a Forex transaction. So let's assume you stay in the United States and you are going to Tokyo for the Tokyo Olympics, which are going on. and you have $1,000 in your wallet. All right, you go to the airport. At the airport, because normally when you go to the airport, you can see these big screens are there where you see currencies, you see data moving up and down. So you go to the forex exchange board, because when you travel at every airport, you have the forex exchange bureau. So you go there, you tell them, okay, I have $1,000 and I need to change it to the Japanese yen. So normally. What they will use to determine the value they will give you is called the currency exchange rate, and the current exchange rate between the United States and the Japanese yen is 100.1. That's the normal. That's the current exchange rate. So if you exchange your $1,000, let me stand here so that you can see very well. So if you exchange your $1,000 to Japanese yen, you're going to be able to have $1,000 times the exchange rate, which is 1,001 Japanese yen. So your $1,000 will give you 1,001, or 100,000 will give you 100,000 Japanese yen. All right. Once you exchange that money, by the time you're supposed to take your flight to Tokyo for the Tokyo Olympics, let's just assume something happened. Right? Let's just assume something happened, or maybe the flight was cancelled, or maybe because of the pandemic that is going around, they say, okay, we're not going to be able to hold the Olympics again, or maybe something just happened that, okay, you're not more going to Japan. Okay, since you're not more going to Japan, you have that money stuck in your pocket. You have the Japanese yen in your wallet. You have it in a big bag, because remember, you were having just $1,000, and now you have 100,000 Japanese yen. You need to be able to change this thing back to the United States dollars. But unfortunately or fortunately, by the time you want to change that money back to the United States dollar, the currency rate has dropped from 100.1 to 90.1. All right. So if the currency rate drops from 100.1 to 90.1, and you have to change that 100 Japanese yen, you have to convert that 100 Japanese yen back to the United States dollar. You have to divide 100 Japanese yen by the current exchange rate. And if you divide this by the current exchange rate, you will have instead 112. You have instead $1,112. So you see, so if you divide this, if you convert that same money you had, if you convert that same 100,000 Japanese yen back to the United States dollar, instead of you having $1,000, which was initially converted, you'll be having $1,112. So making a profit of 112. So you've made a profit. So just because of this transaction, just buying and selling, buying and reselling, you've made a profit of $112. All right. And this exchange rate, it changed in a matter of minute. So that's just a simple example of a forex transaction. In forex, you make money by speculating. You make money by buying a particular currency, holding and selling. So in forex, this is just an example of a forex transaction, because this seems like something that takes time. But if you look on that board, if you check any particular forex or any currency, you move into any forex office and you look on the board, these values are changing in seconds. They are changing in a matter of seconds. So you might see the exchange rate is 101. Before you check, it has gone down to 90, or maybe it has gone up to 200 and stuff like that. So at the same time, even if by the time you were converting that 100,000 Japanese yen back to United States dollar, instead of the currency rate dropping from 100.1 to 90.1, if it went up to, let's just say it went up instead to 200.2, and you divide 100,000 Japanese yen by this, you'll be having instead, I think you have about $720. So you see, at that particular point in time, you must have lost about $280. So in forex trading, that's just the important thing about forex. In forex trading, you can either make a profit, or you can either make a loss. So you need to be able to know what you are doing, so that at the end of the day, you know when to buy, when to hold, when to sell, so that you always end up with a profit. So that's just an example of a forex transaction. So that when you hear people talk of forex, you hear them talking about other things, you'll be able to understand what they are actually talking about. So here, let's talk about why you should start trading forex now. I didn't say tomorrow, right? Why you should start trading forex now. The first reasons or the most important reasons why you should start trading forex now. You see, forex, let me swipe this. Let me first of all remove the most important point. You can see forex trading, the trading hours, the most important, the trading hours, the leverage, the transaction cost, the liquidity, ease of access. All right. So let's expatiate on these points. So talking about the trading hours, forex trading is open 27 hours a day and 5 days a week. So forex trading is open from Monday to Friday. It's open from Monday to Friday and 27 hours a day. So that's why it's called, it's 27 to 5. 27 hours a day and 5 days a week. So because of this, you can get into the forex market at any time, no matter the job you have. You can always schedule time to say, okay, this is the time I'm going to be trading. This is the time I'm going to be at my job. It gives you that flexibility. It gives you that flexibility to manage other jobs alongside trading. So another thing you have is what they call leverage. So with leverage is when your broker actually borrows you money. It's when your broker borrows you money to be able to trade forex. So let's just assume your broker is offering a leverage of 1:100. Although some brokers offer leverage of even 1:1000 or even up to 1:2000. All right, 1:2000. So let's just assume your broker is offering a leverage of 1:100. It means for every, and let's just assume your broker offers a leverage of 1:100 and you have $1,000 in your account. If you have $1,000 in your account, it means that money you have in your account is going to be multiplied by the leverage. It's going to be multiplied by 100. So if you have $1,000 in your account, it will be multiplied by 100. So you'll be trading the same like somebody who is having a 100,000 account. So with this particular leverage, you'll be able to open bigger position. You'll be able to place bigger trade. You'll be able to take bigger contracts, and that's the best thing about forex because of leverage. All right. So let's go to the next point. So we also have what we call transactional costs. The transactional cost in forex is very, very small. The ability for you to be able to get into the market and get out, the transactional cost is the spread. The spreads are very small as compared to stocks. Because if you're somebody who trades stocks, you know that the transactional cost for forex as compared to stock is very, very small. All right. So that's that about the transactional cost. Then the liquidity. The forex market is very, very liquid. That's what gives many people the ability to make millions, to be able to scalp. That's what gives many people the ability to scalp, because there are always buyers and sellers. There are always buyers and sellers in the forex market. All right. So that's that about liquidity. Then ease of access. Under ease of access, this is where you can start trading. This is the point that explains to you can start trading forex right now. Because with the ease of access, the only thing you just need is a laptop or even a phone and internet connection. So with these three things and a little bit of knowledge about forex trading, you can start making money in forex right now. All right. So with that being said, these are the points. These are like the pros. These are the pros of forex trading, or the points that makes forex trading so interesting, and I feel that you should start trading today. So let's go to the other slide where we talk about the currency structure, because we'll talk about when we'll be going further on our course, we'll see what we call the currency. We have a currency and we have currency pairs. So today, let's talk about the currency structure. All right. When you see a particular currency, let's just say, let's just put something like USD. Something like USD. Just this code or GBP. You hear people talk of USB, people talk of GBP. What does this code stand for? Or this particular code, these particular letters, They are not just written out for written sake. They actually represent something. So that's what we call the currency structure. Okay. So each currency, when you see a particular currency pair, maybe USD, Great Britain pound, so each currency pair consists of a 3-letter code. Each currency pair consists of a 3-letter code that is used internationally to represent that particular currency. All right. So with that being said, let's see different currencies, and I'll be able to explain to you guys in a minute. So if you see here, this is a currency. Remember, we are not talking about the currency pair. We are still talking about a currency. So USD stands for a currency. Great Britain pound stands for a currency. NZD stands for a currency, and JPY stands for a currency. All right. So this code, what does this particular code represent? So the first two letters you see on any particular currency pair stands for the country. All right. So the first two letters you see on any particular currency pair stands for the country, and the last letter stands for the currency of that particular country. So D stands for dollars. So let's take GBP. GB stands for the country, which is Great Britain, and P stands for pound. Let's take NZD. NZ stands for New Zealand, and D stands for the dollar. The same thing, NZ stands for New Zealand, and D stands for the dollar. Let's take Japanese yen. JP stands for Japanese. JP stands for Japan, and Y stands for the yen. So if you see any particular currency, we are not talking about currency pairs. Now we are still talking about currency. If you see any particular currency, the first two letters stands for the country that currency represents, and the last letter represents the currency of that particular country. So let's see this. If you look on this slide again, we have been able to, if you check now here, you see, if we're talking about the United States dollar. So before you are able to see this money, USD, that is the United States dollar. The first two letters here stands for the country, and the last letter here stands for the currency of that country. The same thing goes for the pound, the same thing goes for the New Zealand dollar, and the same thing goes for the Japanese yen and the Swiss francs. So I think that one has become clear. And once you already know, just have it at the back of your mind. Anytime you see a code, let's just take any exotic, because what we've been seeing here, these are what we call major currency. These are major currency pairs. So let's see now. Let's take any exotic currency pair. Let's take something like ZAR. With this ZAR, this ZA stands for South Africa. And this arrow stands for the rand. So you see, so the first two letters stands for the country, and the last letter stands for the currency of that particular country. If I take even another exotic currency pair like XAF, this is another currency. These two letters stands for Central Africa, because this is a currency used by many. This particular currency is used by many countries. That's why particular currency can be used by many countries. So these first two letters, SA stands for Central Africa, and then F stands for francs. So this one stands for the Central African francs, CAF. All right. So that is that about a currency structure. So when we see a currency structure, we then see another thing we call major. Let's talk about major currencies, because if you check in Forex, we have more than 180 different currencies. But out of those 180 currencies, you're not going to be trading all. You're just going to trade the major ones. These are the major currencies when it comes to Forex. Beside this, any other currency is just going to be an exotic currency or currency crosses and stuff like that. So these are the major currencies. And for the major currency, if somebody just asks you, let's trade today, we're going to be trading the major currencies. So major currencies, you have something that the US dollar, we have the euro, Great Britain pound, CAS, we have Australian dollar, we have the Canadian dollar, New Zealand dollar, and the Japanese yen. And remember, on the last slide, we did talk about the currency structure. So Great Britain pound, these first two letters stands for what? They stands for Great Britain, and the last letter stands for the currency of that particular country. The same thing goes here. JP stands for Japan, and Y stands for their currency. So these are the 8 major currency pairs which you should be looking. Beside this, there's no other currency pair you should waste your time. It's either you're going to spend a lot of your money on spread, or you're going to blow up your account, because the commissions for exotic currency pair, the commissions are too much. So with that being said, let's go to what we call currency nicknames. Because in forex trading, it's good when you want to call yourself a forex trader, you should be able to talk like a forex trader. All right, before you call yourself a forex trader, sometime it's good you should be able to act and talk as a forex trader. And in forex, all the currencies have their nicknames. You will see maybe somebody will say, okay, today we shorting the bulk and we buying the fiber, or we shorting the yen and we buying the Swiss and stuff like that. That is the language. Just like doctors, when doctors speak, you, an ordinary person, you can't understand, because they are speaking in their language. So us forex traders, sometimes when we speak, even the next person standing next to us, they find it difficult to understand, because we also have a language. So now, these are the nicknames when we come to forex. These are the nicknames. Remember, we talk of the 8 major currency pairs. So beside those 8 major currency pairs, these are the nicknames. You can see for the US dollar, the nickname for the US dollar is the buck. Somebody say, okay, let's buy the buck and sell the fiber, or let's buy the cable and sell the Swiss. So the nickname for the US dollar is the buck. The nickname for the euro is the fiber. The nickname for Great Britain pound is the cable. The nickname for Swiss francs is the Swiss. The nickname for Australian dollar is Aussie. All right. The nickname for Australian dollar is Aussie. The nickname for Canadian dollar is Loni. And the nickname for New Zealand dollar and Japanese yen is Kiwi and the yen, respectively. So those are the few things you should just have in your mind. It shouldn't be a situation where, okay, you see somebody talking about, okay, today we're going to be shorting the yen and buying the cable, or we're going to be shorting the bulk and buying the Kiwi, and you're so lost. No, they're just using the terminology. Even talking about short and longing. Short in forex stands for selling. All right, short is the same as. So just talking about it, if you hear somebody say, okay, let's short this, short is the same as sell. All right, and somebody say, okay, let's long is the same as buy. So that's the terminology when it comes to forex. They can just say, let's short this, let's short the cable, means let's buy Great Britain pound, or let's long the Swiss, means let's buy Swiss franc. So that's the terminology when it comes to forex. As a forex trader, you should be able to understand that terminology. All right. So with that being said, thank you so much for taking your time to watch to the end. Thank you so much for going through this first introductory course, or this first introductory lesson. We're going to be having a series of other lessons. So at least just to have a recap, today we've talked about currencies. Because like a human, the most important thing we have on our body is the heart, is the one pumping blood. The same thing in trading. The most important thing you talk about in trading is currencies. Because you can't talk about trading without talking of currencies. You're either going to be buying this currency pair or selling this currency pair. You're either going to be shorting this currency pair or longing this currency pair. So today we've explained everything about the currency pair, how to buy a currency pair. We've explained to you guys how massive the forex market is, or we've brought to you guys the introductory lessons about forex. So please, if you haven't subscribed to the channel, please subscribe to the channel, so that we're going to be able to go along the whole of this course. We're going to go together. And please, the most important thing I need for you guys, leave a thumb up on this video. Please leave a thumb up on this video. The more thumbs up we have on this video, the more the video is going to go viral, and the more it's going to help many other people gain this free information. All right, so if you haven't subscribed, also subscribe to the channel. On our next video, make sure you follow this playlist, because there's going to be a playlist. This playlist is going to be able to assemble all the videos, all the courses. So make sure you follow, you watch the videos on this playlist, subscribe to the channel. Until then, I will see you guys on another course. Peace.